Welcome aboard the safest airline in Africa. With industry-leading safety measures to protect your well-being. The first in Africa to earn a diamond standard of safety. Offering a more contactless, safe, and seamless experience. Delivered with a smile by Africa's first fully vaccinated crew. Creating special memories that bring the joy back to flying, so you can continue making memories with your loved ones. Book your flight with Rwandair today. Rwandair, the safest airline in Africa. Rwandair.
Thank you very much for setting that tone to us. And key to note from there that I picked from your presentation is much as capital is available from various sources across, SMEs still are not able to access that financing very easily for reasons that I think we are going to discuss today in this panel, and maybe find out some of the reasons why, and try and also find solutions on how to address them. Our topic today is, like it has already been put up, is financing startups and SMEs. And the question is the cash available? And we go on to say, and what can the fintechs, telcos, and financial institutions do to address the startups and SMEs funding crisis? In other words, much as the SMEs and startups want financing, there is an issue there of accessing financing. So that is going to lead our discussions today. I'll start by saying, and thank you very much for the presentation, because I think the panelists have also picked something to discuss on for that. Thank you very much. I'll start by saying that while some SMEs are recognized as a core sector in growing the economies of Africa or this world, there remains a debate on how they are supposed to be driving the economy. And part of what you have just discussed exactly leads to that. The question here that I'm going to first of all ask the bankers that are here that I know, and this will go to you, Peace, is financing is always a challenge for SMEs and startups, particularly startups. We all know that in banking, most banks, at least here in Uganda, we have an arm's length with startups. However good the idea is, we will be very cautious on dealing with any startup. And yet they say that money makes money. So if the startup cannot make money, although ideas also they say make money, but the idea, like you earlier said, has to be funded either by a bank or equity or venture capital, depending. So how then do we think that startups, especially startups, because SMEs, yes, they have a problem, but startups are even worse. How then do we think we'll be able to move them to the next stage? Are there any practical challenges that you know? And if you know any, do you have any solutions that you think we can share with the attendants?
Thank you very much. My name is Peace Aibaziwe Kabunga, and I work for Housing Finance Bank. Just briefly about Housing Finance Bank, you might, from the name, you think it's just about housing, but we are more than that. We are a commercial bank, fully fledged commercial bank, and we offer all solutions. We have 3 institutional investors or shareholders, and that is government with about 49.2% shareholding, NSSF with 50%, and then national housing, minority shareholder with about 0.2%. So we offer all solutions: housing, SME funding, trade finance, investment solutions. So yeah, we are among the top 10 banks in the country. Back to the question that Annette has asked, just to say that SMEs, I think in my view, have just two challenges. One is about survival, and two is about growth. So survival, you're looking at when you start up, how do you continue? Because we all know that most of the businesses in Uganda die, the mortality rate is very high. They die within 1 year or 2 years after startup. And even those that survive, they do not grow as fast as possible. So there is a challenge of survival and sustainable growth. Now, when you look at the startups, I'm going to first, and it's good that Richard talked about the sources of finance. He mentioned quite a number: equity finance, capital venture, self, or ownership equity, talked about friends and family, and of course debt. And he further said that there are people who have money around. Even banks have money. If you ask the banks how much money they hold, that is seated out there looking for who to take it, it's quite a lot. But where is the problem? And it's what I want to speak to. The money is there, but the SMEs are saying, we don't see the money. Those who have ideas, they don't see the money. So where is the problem? Number one, what we've seen is that there is unstructured governance structures. So an owner will come up with a business idea, but then you look at sustainability, you look at the structure around that business, you can't find it. You find it's one-man business, and you know that, nature can call anytime. We can pass on. So if we give you money and you don't have any structures in place, how shall we get the money back? So owner syndrome or founder syndrome is still impacting SMEs or startups. Number two that we have seen is that there is lack of professionalism and managerial skills and even entrepreneurial skills. So there is, yes, you have an idea, but can you put that idea on paper to convince a banker, to convince a financial institution that yes, this is a bankable project, this is a bankable idea? The other challenge that I want to speak to is records. And this one, of course, happens for even the ongoing or the going concern SMEs. Very poor at keeping records. So there is information opaqueness. So you want me to come in and finance, but I'm not able to understand the business. I am not able to see any information. You're saying that you make sales of 100,000 every day, but I can't see the sales. There is nothing, no invoice. There is nothing on the mobile money statement. There is nothing in the bank account. So how do I trust you that you're speaking the truth? So record management. Now, about what we can do, because the money is there, but the challenges are real. So it's about working together. And I wanted to mention something about debt and equity. Ladies and gentlemen, when you start a business, what is the skin? What is your skin in the game? So you want a bank to lend you money, but then how much have you saved? Or how much have you put in? Because if you don't have a skin in the game, you can easily walk away and you leave the bank to suffer. The other thing that I want to talk about is with a bank, the reason why banks go slow on startups. One is that with a bank loan, you're supposed to start paying back. We can give you grace period, 6 months, 1 year. But think about a startup. Recently, I was seeing in our neighborhood, someone started a business. It's a bar and a spa. But every time I pass, there is no single car parked. They have not seen any client. So you can have a business idea, and you think day one, customers are going to flock in, but they don't show up. So what do? With the bank loan, we shall not say you did not get customers. We gave you money. We need our money back. We need interest. We need principal. So for startups, my proposal or my idea would be, is it possible, for example, to use your own money or use some equity finance that can give you time to first grow, get to a certain level, and then the bank can set in? Alternatively, we have other sources of finance, like trade finance. So trade finance, the way it works, you can have an LPO, a local purchase order. So you have to supply certain goods, but you don't have the money. So you may not put in your own money, but the bank, the institution, can look at that LPO and say, okay, you want to supply, let's say, Uganda prisons. You want to supply them goods worth 100 million. You don't have the money. So the bank can use that LPO and give you money to supply. So those are some of the alternative sources of financing we have put in place as commercial banks to support startups, to support SMEs. But we all have a big role to play. Thank you.
Thank you very much, Peace. I think thank you, Peace, for that elaborate explanation you have given. I'm sure there will be quite a number of questions from the listeners on what you intend to exactly do to make them be able to access that financing in the future. Like we had earlier, I think it was Dr. Kwaku who was saying that for you to be able to sell your products even to people like startups and SMEs, you need to look at the kind of environment you are operating in. And that will somehow set the tone on how you are going to have to access those. And I think that also will take us a bit later from this, because I wanted to ask Nana, who is also virtually in Ghana, and he's also a banker, on how the fintechs have actually picked that opportunity to come up and serve those startups and small SMEs that the banks have failed to serve. So I'll still go back to the same question, and I'm going to ask Nana. I don't know whether he's able to get online.
No, I'm online.
Okay. You are welcome, Nana. Nana is the CEO of the Universal Merchant Bank in Ghana. So welcome, Nana. And my question to you is, from the banking standpoint, what can you or must you do to grow the startups, the sector, to help us create jobs for the youth? And if you have any practical experience that you have had in your bank, can you please share it with us? Thank you.
Very much, and good afternoon to everybody. I have been enjoying the discussion that has been going on, and I think that it just shows that SME continues to remain very relevant in our economies. From Ghana, we have quite a significant SME population, which is a significant contribution to our growth and our economy. The issue has always been, how do you finance them in a way, or how do you finance the SME in a way that allows sustainability? And I think a number of those points have been discussed here. You know, when we were in school, we were taught that when you are starting a business, you approach your family and you approach your friends, and you approach other people that you could convince to help you to finance. The reason for that is that we acknowledge that when you are starting, it will take you a while before you start to make money. And therefore, you need patient money to enable you to start the business. But apart from family and friends, there is also quite a number of sources of capital that is accessible. we've seen a lot of social investment come through to the continent in particular. And there are a number of grants and aid. What has changed about those things is that in the past, they used to sort of bring in a lot of the money and give it to SMEs without a lot of focus on monitoring what the returns were. These days, a lot of people who have these funds actually need a bit more detail from our SMEs. They want to understand what your plan is, what you've done to make sure that it's a viable plan, and what is your forecast in terms of when you think you will start to make money. So what we are finding out in working with our SMEs is that now the SMEs need actually to invest a lot in some sort of disciplined approach in doing their business, and not only be passionate about the idea, but also invest in the skills to enable you to communicate effectively, if you like, to who the potential investor is. A number of the new SMEs that we're dealing with are being able to attract funds not only locally, but globally as well. But once to be able to do that, the standards you set must be comparable to some of the standards that are out there in the market. There's a lot of opportunity that we see. We are producing a lot in our countries at the moment. And I think the other thing we are finding is that once you can demonstrate how or who you are going to be selling this to, and demonstrate that if you have an effective enough market to sell to, then you attract the interest of a lot of these sort of investors out there. And I think finally, I think technology is helping us a great deal in this regard. Because at first you could only talk to people locally and sell your ideas to them locally. Because of technology, like we're doing now, we're sharing ideas across countries through technology. And that is obviously exposing a lot of SMEs to potential investors who are not necessarily within their sort of environment. And that allows us to be able to work with SMEs to project them. From a banking perspective, normally what banks will do will be, once the idea becomes viable and you start to commercialize the idea, we come in with sort of short-term funds which help with your working capital, your day-to-day working capital requirements. Now, why don't we finance it when you are now building the idea? Because most of the people who give money to banks are expecting short-term returns. We raise funds through savings and investment, and then we lend it out. Most of our clients who give us savings and investments are expecting short-term returns and are not necessarily patient enough for us to lend that money on a long-term project. So because of that mismatch, we normally work in partnership with people who will supply the long-term funds while we do the sort of working capital funds as we go along. The other thing that as banks we can offer is that we can offer collaborations with other clients that we have, so that we build a value chain for these SMEs to be able to sell among our sort of client base as well. So for me, the key thing for any SME looking out for money is some level of discipline, investing in some skills that you can project yourself well, and providing information in a way that convinces everybody that you actually know what it is that you're doing.
Thank you very much for that. I think most of us would resonate with it. The years I actually worked as a bank, especially with SMEs at that time, is when you would even try to explain to a young SME that you need to have your books of accounts, you need to have a discipline like Nana has said, in that capital is your boss and you are a worker of capital. So even if the money is yours, it's not yours. The business owns it. The person would never ever understand that kind of thing, would say, but it's my money. I can afford to pay school fees for my niece by pulling it out of the business and paying your school fees for your niece, forgetting that that money is coming out of your capital and is going to hinder your business as you go along. So, Nana, I would like to thank you for that, because it is a real situation. Most startups and SMEs, they really do not have that discipline as to run the business as a business. They are one and the same. They are inseparable. So at the end of the day, that's why I think Peace was saying they don't live to see their growth. So they die at early stages. So I would also like now to go ahead and ask, as banks, much as we are saying what we are saying, we lose quite big opportunities by not financing startups. There are some people who have very good ideas as a startup, but because we don't believe that they are going to be able to pay in the future, you neglect it immediately. You do not want to touch it. And yet, I'm sure every business in this world started as a startup and grew. So in that, from that point of view, we have seen fintechs come from all over the place. And fintechs, telcos, mention it, they have come in and taken the business away from the banks that actually are making a lot of money for them. So I would like to touch on that particular topic, that in recent years, when I was reading, in recent years, I think a lot of funding has come in to fintechs. I was reading by 2021, over $2 billion had come in to fund fintechs. You'll actually find like the Flutterwaves, the Jumos and the like, these payment systems, remittances, they've all come into play and people are really funding them. So it has become a soft spot for all these people we are saying are startups and SMEs. They prefer using that kind of mode, either from sending their monies. We've seen in the banks, some people are trading without even going through the bank by sending their monies through those kinds of structures. So I wanted to know, why do you think this is so? And because of this funding to this particular sector, which the fintechs, what other sectors have actually have lost because of that? There are quite a number of sectors, but some sectors have lost because the funding has gone into fintechs. I wanted now to ask Eric, you being a manager for Chanzo Capital, working in 32 countries in Africa, and really being in high tech, why do you think actually fintechs are actually overtaking banks in terms of even lending, even deposit mobilization?
Thank you very much, Madam Moderator. So I just make two fundamental distinctions, and then I'll respond to the question. One is that on this panel we have, equity investors and banks. The difference between us is that banks don't take risk. Equity investors take risk. And because we take risks, we want to own a part of the business, so that we're on the same side with you. So that's the fundamental difference. Okay? So if you want, and because banks don't take risks, they want to have visibility that you can pay the money back, right? So they want a collateral, they want to see your receivables, or they want to see an LPO, because they can be sure that the money will come back. But we are willing to lose the money. And so we want to be on the same side with you. We are willing to take the risks. So part of the reason that there's a misconnect is that you don't go to a bank when you start a business, because they're not in the business of taking risk. You go to the guys who take risks, and they'll provide you the initial capital to start. The second important distinction is that when you are a startup, you fundamentally are trying to take an idea and execute and make it become a reality, right? Now that spectrum, the probability that it will fail is very high, right? And so you fundamentally want to associate yourself with VCs that take that kind of risk. And so that risk spectrum aligns to their professional interest, competence, and experience. So for example, in your question, you talk about fintechs. The reason that fintechs have become predominant on the continent is because if you look at fundamentally every economy works on payment, right? So in Africa, debit and credit cards did not really take off with banks. And the fundamental reason is that what you need to do that in the credit history and all that stuff wasn't there. But mobile money became the way, through Safaricom, everybody uses it to make payments. And so based on that, it became the rails on which payment happened. So fintechs have become dominant because they are serving a certain need that the banking sector did not serve. Not because they didn't want to serve that space, but they were not structured to do that. Right? You need to be a formal, they didn't have KYC on you, etc. Momo, I show up, I give an ID. Before you didn't even need an ID. Then you get a phone number, and you can start transacting. And the fundamental important difference is that when it came to mobile money, you actually prepaid. And this is a very important distinction from credit, the credit side, where you're actually using money that you actually don't have. But when it came to fintechs, you actually have to, airtime, you have to buy the airtime and then put it on your phone. And that airtime is what is converted now to mobile money. So technically, the risk is somehow minimized because you are spending money that you have already. So, and this is how fintechs became very dominant with the mobile operators, because the mobile operator can see that you put money in your account, and they can. So, and the reason why we, the VC, started funding that space was that we realized that there's a huge market of transactions that were not happening because nobody was providing the rail for that. And this is why the banks today, you talk about Flutterwave, that now it's a $3 billion company. It's the biggest, bigger than all the banks in Nigeria. Why? Because they are targeting the mass market where the banks are not focused on. So let me conclude by giving a very important example from Ghana. So the banking sector in Ghana has a population of about 5 million people. Right? The total banking population is about 5 million. MTN in Ghana's Momo alone is 26 million people. And this happened overnight when they switched on mobile money. Right? Now, so suddenly MTN and all these people put money on their phones. Suddenly MTN has all this float, this man that sits. So now MTN can provide lending, right? So they can start competing with you, the banks, right? So I think that the way to look at the equation is that, and the market segment that the fintechs are targeting are not the market segments that you are targeting as a bank. And so you need to start re-looking at your customer segmentation. But banks will definitely not directly be able to do this because of sort of the segmentation that I kind of lay out. Thank you.
Thank you, Eric, for that explanation. And still on the same question, I would like to go to Patricia, who is compliance and head of legal in a bank. And according to what you have said, you've just talked about KYC. Banks are very, very, very strict on KYC. They'll practically ask you for an arm and a leg, produce this, produce that, produce the other, which from what you have just said, I'll go to Momo Pay and I'll go and withdraw my money and still do what I want to do without being asked, bring your head, your legs, and everything else. So I wanted to ask Patricia, from the banking point of view, in relation to what the fintechs are trying to do vis-a-vis the banks, what's your view and what do you think that banks can actually improve on to also participate in the same offering the fintechs are offering?
Thank you, Annette. Oh, Annette, by the way, was my former boss, so I'm seated with my boss. Like Annette said, my name is Patricia, and I head the Legal and Compliance Department at EcoBank. Just for our EcoBank, for those ones who don't know EcoBank, we are one bank that has the largest footprint in the continent, and we're passionate about the economic development of Africa. So back to what Annette has asked, if you're right, banks will always ask about for an arm and a leg for all the documents that you want. And that just goes back to what Eric said, that we are not risk takers. But if we are to participate, what I can say right now for the fintechs and what is happening in the market, the slogan for bank was, if you don't have a title, we do not give you money. So definitely we wanted collateral before we could advance funds. And where we are moving now and where the world is going is, data used to be, if I may say in Uganda, it was the oil. Then, like everyone was jumping, oil is in Uganda, oil is here. But now where we are, data is the air. We have to breathe it. So whatever we do, and as banks, we have to actually adopt to that and start breathing data. So if we are to play in that space, just like Eric said, and that's not maybe our segmentation, then key, as the subject has been since morning, this is partnerships, collaborations. It's all about partnership, collaboration. And if you look at the fintech, they are very fast. And they are quick to innovate solutions to actually address a pain point that a client would want. So because banks are not that fast, we are not that agile, what we have to do if to look at the future is we need to partner a lot with all the fintechs, try to collaborate. That's why we hear about the APIs. Right now we have SMEs academies, we have the incubation centers, and we're working with the fintechs just to make sure we can tap into that space. And like Eric said, you find the database, total banking customers in Uganda, I think we have about 10 million customers. But if we go to the mobile side, then that's a totally different space. So what do we have to tap into that space? And like you said, despite asking for the KYC, the data that the fintechs hold right now is just adequate for banks to actually tap in. And if we can get that opportunity to work and partner with the fintechs, then I believe the solutions can be tailored and we should be able to tap into that space. So one thing that as banks we have to do, it's our time to be innovative. Two, we need to actually understand what is happening in the world of the fintechs. And if I listen to, yes, like what Erika said about Flutterwave, and I know right now we have a new, there's a new entrant in the market, the Penguin company. Cheaper, and there's another one that with the penguin, the wave. Ecobank is in Senegal, but if you go to Senegal, Wave is actually the in thing. Just they're taking over what the banking space. So what are we going to do as banks? Are we going to sit back and say, oh, the fintechs have come in and we can't actually play in this space? No, the solution lies in the innovations. Just like we've discussed earlier on from the previous discussants. And two, we need to tap into that space for data, breathe that data, use it to make money from that space. So if I were to ask Annette, KYC that you've said, all the fintechs have this data. And I happen to be the chair of the NIRA and Uganda Bankers Association integration. We are trying to integrate with NIRA and all the banks to be able to get all this information, which means we are not just sleeping as banks, we are also trying to find ways to make it easier for us to work with the SMEs. I know they have challenges, like P said, in terms of keeping the financial records, and yet the banks would like to have the financial records. What are we doing? One is we can actually start with the SME academies, train them, work with them, have the relationship managers who can actually go down and train them. So this is one of the innovations that I know UNRWA is working on, setting up a few SMEs in Uganda, and they will actually bring them up to ensure that they meet all the requisite standards. So the banks could also tap into that space, and that is one space that we're working on as a financial institution. We've set up an SME academy, which will tailor back down to the country, and we'll be able to tap into this and find solutions for the SMEs to actually grow and partner with them. Thank you.
Thank you. Hello. Thank you, Patricia, for that. That was actually going to be my next question on how banks or financial players, and financial players, I don't mean only banks, they could also be insurance companies and others, how they intend now to work together to help them grow the SMEs and startups. Some of the things you have mentioned, but I also would like to ask Michael on whether you can also touch on that. And in addition, you coming from Rock Telecom as Chief Commercial Manager, I would also want to add on a question on mobile money. Mobile money has actually increased payments and remittances in addition to lending and all that stuff. So on, and I don't know whether Rock is doing it, but I know MTN is doing it, Airtel is doing it. They really are working on, and I think the regulator also is in the process of working on the national payment system, where the banks can also start doing their remittances and payments using that system. We also see like banks have partnered in a company called ABC, where they all share agents across Uganda at least, to make deposits and payments also quicker, especially for SMEs again, and maybe the medium SMEs. You as telco, and I know you are very interested in this, how do you see this going to help now in Uganda? I don't know whether you are outside Uganda. Is Rock outside Uganda also? How many countries are you in?
Yes, we're in 2 countries. We're in Uganda and Zambia.
Okay, even if it is just the 2 countries, how do you see this coming to help the SMEs and startups, if I may say?
Thank you very much. My name is, sorry, there's a bit of feedback. My name is Michael Mukasa. I'm the Chief Commercial Officer for Rock Telecom. I'd like to address the second question, but first maybe I'd like to give a bit of background, because I think I'm approaching this issue from the other perspective of we were once a startup and we could be considered an SME by some banks or some criteria. And a lot of the things I've been hearing today really resonate with me in terms of the experience I've had as a startup trying to raise money, as an SME trying to expand the business, and even just as a local businessman generally. So our journey started 15 years ago, actually 15 and a half. And when we started, we faced a lot of the challenges most startups in Africa and around the world face, which is we didn't have a proven track record, or we didn't have money or assets that we could put up as security to get financing for the business. And we went to different kinds of financiers, including venture capitalists, who we did approach, and they were very willing to give us the money to do the business. We approached banks, but most of the requirements the banks wanted, we didn't have as a company. We were just starting, and we didn't want to put our personal assets up, which was the other option. So what can you do as a startup, I guess is the question. You can't get money from the bank because, like Eric has pointed out, banks are not structured to give money to startups with good ideas. Because yes, the failure rate is very high and there's no security. So in our case, it became a question of the chicken and the egg. Do you get the money first and then do the business, or do you just start doing the business and see what money comes in? And we made the latter choice, which is we just started doing business with whatever resources we had. And as we built scale, we were able to now go to formal financial institutions like banks and get money, which took about 5 years before we felt we had reached that scale. For a lot of SMEs, it's a struggle because they don't make it to the 5-year mark. And because they can't make it to the 5-year mark, they don't have the time to put into place all the all the documentation, all the systems, and all of the requirements. So mostly what I've seen in our local market here is they resort to other forms of financing. What's very popular now are investment clubs. So you find a group of individuals will organize themselves as a pool of capital, and then they'll invest into different businesses. And usually their due diligence process is not the same as an investment banker or as a commercial bank. And so that's one option. I didn't see it in the presentation that Richard made, but it is a very viable option, and it's very common these days for startups and SMEs to get money from investment clubs and other sources of finance that are out there. So I think it's not impossible to start in business. You just have to believe in yourself and get somebody, a group of people who believe in you, and you can get the money. That being said, when we talk about mobile money in the banking system, I'd like to again break that down, because there are different reasons to use mobile money. It's very transactional in that it's an easy way to send and receive money, and then to even make payments now, because most retail outlets accept mobile money as a form of payment at the point of sale. On the other hand, there are things mobile money can't do. One, I think cross-border transactions has been a challenge, both because of exchange rate and regulations, which is something that banks still have to do. And number two would be maybe what I would call large-scale lending, because the money you can borrow on mobile money is very small. You can't borrow in big amounts. So, I mean, as a transactional medium, it's great. If it's a small transaction or if it's a personal transaction. As a financial system, I don't think it's the same thing. It's two different issues. And so I would say that I don't think it's a battle of is mobile money taking over banking, or like we pointed out, is mobile money addressing a market which banks were not structured to serve. And I think it's really a technological tool, and just like any other technological tool, it has its good and bad aspects to it. For us as more of a service provider, we look at all of these as enablers of our business. So we use all of the above as channels to make life easy for our customers. We know many customers, for a variety of reasons, prefer to transact in one way or another, be it via bank, be it via mobile money, be it via another payment platform like Visa, which is also very ubiquitous, or MasterCard. So all of these we just look at as payment platforms, and we try to integrate with all of them as much as possible in the interest of serving our customers. That would be my response on that. Thank you.
Okay. You just mentioned something on cross-border, and just clicked my mind that given that we are trying to push for AFTA, and business is going to be done across the borders, and yet what you're saying is that we still have a limitation on remittances and payments, even for startups that might get interested, or SMEs in different countries want to exchange goods with other countries, but then we have that limitation of cross-border remittances. What do you think as a telco can be done to ease that and encourage free trade across the region?
Thank you. I think to address that specifically, it's more of a regulatory challenge. I think in most of the telcos who deal in mobile money directly, the mobile money company has been separated from the telco. And the reason is that the mobile money company has regulatory challenges which a telco doesn't face. Telcos are connecting people to communicate, and that's what they're designed to do. They're not financial institutions. So when you think about mobile money, if it's going to become a financial platform, it has to be regulated as a financial platform, and the regulations have to match in different countries. Currently, if you send mobile money to another country, that exchange rate is determined arbitrarily. It would be the word I would use. So I mean, anybody can decide on any exchange rate, which you feel as a business works for you on that specific day, but there's no regulation of that. Yet there should be a regulation and there should be some agreement. And then what if the transaction goes wrong? How do you trace that money? How do you verify it reached the sender? How do you verify it's the amount that was sent by the sender? All of these have to be regulated. And I think if we're going to have this kind of business across Africa, we should have coordination of the regulation across all the countries.
Thank you for
I'm
that
sorry
explanation.
to interrupt. I just wanted to add a little bit to just this particular discussion. I think that we actually are in a moment at the moment where this opportunity is actually set to be realized. Because under the Africa Free Trade, I think Afrexim Bank in Egypt has actually championed a project that was recently launched in Ghana, which has a collaboration of most of the governors of the central banks of most of the African countries, which is the Pan-African Payment and Settlement System. And so through technology, this new system has been launched. In theory, what the system should do is to enable us to send money cross-border in terms of, which it works very similar to what SWIFT does. But in this case, the system should allow real-time settlement from one country to the other, with pre-agreed exchange rates that have been sort of agreed on a daily basis. It's been launched. What the companies are now doing is trying to get the various banks and financial services companies in the various countries to hook onto, if you like, this platform. So that if it becomes successful, in theory, I should be able to order flowers from Kenya and pay with cedis, and the person in Kenya will receive it in shillings in real time. So these are some of the benefits that technology and also the Africa Free Trade, because of the collaboration between the countries, is beginning to offer, which should now open up a lot of opportunity, particularly for SMEs, to be able to sell not only within their local region, but across border as well.
Thank you so much for that addition. I think we still have some work to do as a country, as a region, and Africa in that, if we are going to push the agenda of AFTA. The next question goes to Mr. Ntege. There's so much talk going about transforming the financial sectors in Africa to respond to the financial needs of the private sector. First of all, how do you define this transformation? What is it? What does it mean, this transformation? And in addition, is there anything governments across can do to leverage financial institutions to boost these SMEs and startups to grow across the Africa region?
By Nation is your go-to website for exclusive content with in-depth stories, analysis, and detailed coverage. Sign up with these quick and easy steps. Visit www.monitor.co.ug. Sign up for free for a limited period of time with either Facebook or Google. Or you can enter your email address, password, followed by your phone number. Click Sign Up. You are now a registered user. Your privacy will be protected when you share information with us. This registration is part of our effort to understand our audiences and make better business decisions to serve you better. For any queries, please contact us on 0312 301 230 or email us at customercareug@ug.nationmedia.com. Monitor, powered by Nation. Terms and conditions apply.
Welcome to Nobel.
Internet is not only important, but is part of us now. We use it in our studies, at work, home, and while going about our daily errands. However, an inconsistent internet connection is common and can be frustrating. But the good news is, we are here to the rescue. At Rock Telecom, we strive to promote integrity, dependability, innovation, customer service, and open-mindedness. Visit our website www.rocktelecom.co.ug for more information. Rock Telecom. Rock Telecom is licensed by the Uganda Communications Commission.
Welcome aboard the safest airline in Africa. With industry-leading safety measures to protect your well-being. The first in Africa to earn a diamond standard of safety. Offering a more contactless, safe, and seamless experience. Delivered with a smile by Africa's first fully vaccinated crew. Creating special memories that bring the joy back to flying, so you can continue making memories with your loved ones. Book your flight with Rwandair today. Rwandair, the safest airline in Africa.
Rwandair, fly the dream of Africa.
So we pick travelers, our typical customers are people flying in and out of the country. So we pick those from the airport, wherever they're going and back. And we do this through a network of driver partners for whom we give regular business and improve livelihoods. They can book through WhatsApp, they can call us, they can email us. We just try to make it as simple and convenient, as seamless as possible for our customers.
What is creating shared value all about? CSV is short for Creating Shared Value. It is a powerful business management concept that can promote companies to think differently about their approach to social and environmental issues. It is a strategy for addressing society's challenges through profitable business models. It's all about policies and practices that enhance the competitiveness of companies while improving social and environmental conditions in the regions in which they operate. CSV is not CSR. Creating shared value goes beyond philanthropy